Education is really a process. It's not an answer. It's not a book. So for those, some of you are starting here, some of you are down here, some of you are at the other end already. But the point here is this: you don't get it all in one day. You don't get it from a book. So as Kenny said, mine started with a 1-bedroom, 1-bath on the island of Maui. And the problem is most people don't start. And generally what they say is, I don't have the money and things like this. And it's ridiculous. You know, we didn't have money either.
No, that was when I first got into the business, that's what I really thought you needed. I think that's what holds a lot of people back, and I think they also use it as an excuse.
Yeah.
They say, I don't have the money, therefore I can't start, which it's not that at all. There's more money than there are deals. That's been my experience now. And so once I got the education, then I realized that there's a lot of people, just like ones with money, that are looking for a place to put it. Right? And you can see how the banks react, how much money there is in the economy, because when the banks basically are turning away deposits or charging you to put your money in the bank, then you know that there's a lot of money in the system.
And that's why it says savers are losers, because every time the government prints money, the value of money goes down, but really debtors are winners. So Kenny and I have been friends for about 12, 15 years now. We've made millions of dollars together. We've never lost any money, ups and downs. Even when it was going down, we're making money. And that is the power of Rich Dad's education, Rich Dad's coaching, our books, our games, and all that, is to get your mind into the game, because that's all it really is, right?
Well, people ask, sometimes they question, well, what do you mean you've never lost any money? Well, the reason is that because everything that we've done has been based on cash flow. So every property that we've purchased together has always been based on cash flow. So
well, I gotta explain that. Most people flip properties. We don't flip.
Right. So like if you buy a piece of land, there's no cash flow. If you buy a vacant building, there's no cash flow. But everything we buy is based on cash flow. So we're not as focused as the value of the project, because we're not trying to sell it at a higher price later. Although we are focused on that. We want to make sure that the property goes up in value. But if it doesn't, if it stays flat or even goes down, at least we have that cash flow to fall back on.
Right. So the point here, ladies and gentlemen, if you're just starting out and you're right here, you may not have much money, may not have a job and all this, but that's really not an excuse, because you can still start. And I would suggest, getting Kenny's ABCs of real estate, looking at programs, because we're going to go into, let's start out how I started. It was, the reason I got into real estate was that my rich dad said one thing. He says, don't save money, learn how to use debt. And so it's counterintuitive to what most people think, because most financial advisors say save money and get out of debt. We're saying don't save money, get into debt. So it's a different process, so that's really it. I signed up for a little real estate course. I've told this story before. I get tired of listening to myself. It was $385. It was 3 days. That was the start. So I signed up, signed my name, sat down on the course. 3 days later, at the end of the course, he was a great instructor, because he was a real estate investor. He didn't need the money. And that's when you know the guy is real, because you could tell he didn't need the money. He liked teaching. He liked inspiring people. So he was just like my rich dad. He says, you don't need the money. So then the next thing he said at the end of the program, he says, when you leave this program, it's 3 days, Friday, Saturday, Sunday, he says, your education begins now. So he says, at the end, when you end Monday morning, your job is to look at 100 properties. 100 properties in 90 days. Take everything I've taught you and look at 100 properties. That was the start. So naturally, 30 guys and 30 guys, 35 guys in the class, they all say, okay, yeah, we'll all do it. We all break into little teams. And as you know, by Tuesday, they'll quit because they're too busy. They got from the school, they didn't start here again. But there's 3 or 4 other guys and we stayed through it, and we went to real estate agents, went through the little files. It was really antiquated ways of MLS, multiple listing services. We were looking for little dinky deals, small deals, because that's all we could afford. We didn't have any money. So we kept looking, I'll go knocking on doors at real estate agents, and I go knocking on the doors, and the first thing they say to me, you can't do that here. This is Hawaii. You can do that in mainland, in California, Nebraska, but you can't do it here in Hawaii. And that's the first thing one of the first things my advisor said, is that's what losers will tell you. You can't do that here. Look, somebody is doing it here. May not be the real estate agent, but it might be you. So I knocked on the doors, we'd find these deals, we have to go look at them, and we have to write down It was a 3-bedroom, 2-bath, And so at the end of 90 days, we had 100 of these. And it was day and night. We just kept going until we got it done. And that was the process.
That's right.
At the end of the process, I'd gone through 100 deals. And it was like, wow, I learned more going through the process, talking to real estate agents, knocking on doors, looking at different properties. And finally, I was desperate. This guy says, well, I got what you're looking for on the island of Maui. Little 1-bedroom, 1-bath condo for $18,000. I went, holy mackerel. But the deal was I could not use any of my money. That was, the advisor said, I'm going to teach you so you'll never need to use your money again. If you can raise capital, you'll always be a rich man. So I said, okay. So I go to this little $18,000 unit, little dinky thing. $18,000. I said, what's the price on it? He says, how much do I put down? He says, $2,000 or $1,800, 10% down. It was a foreclosure. I broke up my credit card and I bought it. So I had no money in the deal and I made $25 a month. No money in the deal, $25 a month. And my brain went, it shook. I went, oh my God, I'll never need money again. I can never say I can't afford it. And I can never say I can't do that. I went, oh my God. And that's how I got started. And today, Kenny and I do lots of deals, but Kenny kept on and I kind of stayed with the small, I think I stopped at 100 units. And I said, this is not my business. 100 units is a lot of work. So Kenny took off after that and we still make millions of dollars. When the market crashed, we made even more. But the process is the same, right?
Yeah.
But the point here is this, you see, stock people are into the equity. It's their cash. The reason I invest with Kenny is because we're into debt. You see, the beauty of real estate over stocks, there's margins and things like that with stocks, but with real estate, banks are really anxious to lend you money if you're good. If you're not good, they don't lend you money. So again, it goes back to when somebody says, I don't have money, it's because you don't have education. Stuff like this and this and this. You go, well, I don't have money, so I don't start. Well, you're not supposed to use your own money anyway. And that was my rich dad's lesson to me back in the 70s. He says, look, the dollar is no longer backed by gold. The dollar is now backed by debt, U.S. Treasuries. And he says, if you're going to be rich, you'd better understand how to use debt. Meanwhile, the other people, all the financial people, save, 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 and put your money in the mutual funds. So when you put your savings over here to the bank, it's their liability because they got to pay interest on it.
Right.
So what they want to do is move this over here.
Right, and that's what they do.
And so this is where Ken shows up and says, thank you very much.
It's the same thing with a life insurance company or a pension or even a 401k. That money gets invested. So whatever, that's why these financial planners say save, save, save. You know why? Because they want your savings. Those savings that people put in the bank, this is all people, gets invested. And so we're asking you guys to be over here, and you can do this.
In other words, if this is a bank or a mutual fund company or whatever it is, the moment you put your savings in here or you put your 401k to the bank, it's a liability because they're now responsible for it.
Right.
And they've got to move that money over here. The only way they can move that is by debt.
Correct.
So Kenny goes up there to the insurance company, a mutual fund company, and he says, can I have some money? I got this business, I got this huge project over here, I need to move it. And today, the big problem is you guys have too much money, right?
That's right. There's so much money in savings. If you just Google what consumers are saving now, you're going to see that this is at a very, very high point right now because of the recession. It was at a very low point at the beginning of the recession, and now it's very, very high. And so that's why interest rates are low. That's because they're trying to lend it out so much. And again, it's just a supply and demand thing. Because there's so much money in savings that it's so competitive that rates are low.
Right. So this is the strange part. This is the bank. Your savings are their liability. But if this is you, your savings are your asset.
Right.
That's why it's called a balance sheet. So the reason my rich dad says I had to learn how to, invest in real estate and get comfortable with it, start the process, was because I needed to borrow this money out. Whereas the other financial advisors say, keep your money over here. To me, this is really stupid.
Right, and what's interesting is neither of us knew this stuff when we got out of school. No. You kind of bumble through it. You get a loan and you're like, well, why are you giving me all this money for so cheap? Well, it's because they need to lend it out. So different institutions have lots of money, and their job is to place it. They place it in business, lines of credit, real estate, and all kinds of other investments.
And they love real estate.
They do love real estate.
So think of it this way. If you're a banker and your savings and your 401k are here, the bank's in trouble.
Right.
Because they've got to pay you interest on it.
Right.
And they don't want to pay you interest. So let's say they're paying you 1%, they're going to lend it out at 5%.
Right.
That's how money is made.
That's how they make money.
And that is the game of money. So really, that's why I took this course back in 1973, went through the process, looking at the 100 houses. So that's why Kenny says today he has, 8,000?
Yeah.
8,000 units over here. Kim and I have about 4,000, but it all started with one bedroom, one bath.
One bath, right.
ROI stands for return on an investment. So when guys tell me I'm getting an 8% ROI, I'm going, geez, that's chump change. And why would you work for 8%? That is so low. Today, guys are happy to get 5%. 3%. So this is the point here, the more debt you use, the higher your ROI. It is so counterintuitive to what people are thinking. So let's say I have 100% debt. My first property was $18,000. I put $2,000 down with a credit card, and I was making $25 a month.
I think that's the best example, Robert, because essentially what you did was you didn't use any of your own money. So the only costs that you had was whatever your debt was and whatever it cost the $1,800 on your credit card was.
Right. But the idea was not to make money. The idea was to train my mind to think that I want 100% debt. Most people, I want to get out of debt. I want to get out of debt. I want to get out of debt. And what we're saying here is the debt pays all your expenses and gives you some income. That's really as simple as it gets. So we started with this. So if I have no money in the deal, it's 100% debt, and I'm making $25, what is my return on investment?
It's infinite.
Yeah, it's this.
Right. I mean, you basically have no investment, and you're making $25 a month.
Yeah, no money in the deal. It's just knowledge going into the deal. Now, I learned a lot on that process, and it wasn't all hunky-dory. But today, this is what we're doing. The difference is today, how much money do you think you borrowed last year?
We probably borrowed $80 million. The reason why we want so much debt is because if I'm borrowing right now, I'm borrowing at say 4 or 4.5%, and inflation is say 4.5%. Then I'm using basically your money, pension fund,
mutual funds, savings.
Insurance, savings. I'm using your money to hedge inflation and buying assets. So that's how the system works, and that's how the wealthy get really wealthy.
So this is what we teach people. The whole part here is you have the power to do it. I mean, anybody can do this. Anybody can. Well, this is today, but there's still deals. There's many deals around.
The most obvious are using bank debt to buy a home.
Well, it's not even that. It's how you think about it. You see, the best thing about doing those 100 deals is I was learning to think about debt is good. As long as you have in your mind that debt is bad, I want to use my equity, your ROI goes down.
That's a good point. And there is bad debt, of course.
Yeah.
Bad debt would be credit card debt, or it could be
if it was costing me $25.
Yeah, exactly right. Yeah, so there's definitely debt that you don't want to get into. But we're talking about debt that's paid by a tenant.
Yeah.
Debt that's paid off by somebody else. So that's a really important point. So if you're borrowing money, you're going to want to make sure that you have the rent to cover it.